This week, oil prices dropped sharply after months of high costs. The main reason? Easing tensions in the Middle East, a region crucial to global oil supply. News of possible peace talks has brought optimism to the markets, reversing the recent upward trend. Oil prices are extremely sensitive to global events. Just one headline can send them soaring or crashing. This week's positive news has traders betting on stability, not disruption. For consumers, falling oil prices mean cheaper gas and lower transportation costs. Businesses benefit too, as reduced fuel expenses can lead to lower prices for goods and services. While the situation is still evolving, this price dip is a welcome relief after a period of strain. It's a reminder of how events far away can directly impact your wallet. Why does the Middle East affect your gas prices so much? It might seem far away, but what happens there can hit your wallet right here at home. The region is often in the headlines, but its impact on your daily life is more direct than you might think. It's simple. Countries like Saudi Arabia, Iraq, and Iran produce a huge share of the world's oil. In fact, the Middle East holds over half of the world's proven oil reserves, making it the heart of global energy supply. When these countries pump oil, it flows into a worldwide network that keeps cars running, planes flying, and factories working. Any instability there can disrupt supply, sending prices higher everywhere. Even the fear of conflict can drive up prices, as buyers pay more to guard against shortages. Political tensions, wars, or even rumors of unrest can make oil markets jittery, causing price spikes that ripple across the globe. Think of it like a major highway for oil. If it's threatened, everyone worries about getting enough. The Strait of Hormuz, for example, is a narrow passage where a huge portion of the world's oil travels every day. If that route is blocked or even threatened, it can send shockwaves through global markets. This week, however, news of peace and de-escalation has calmed those fears. As the risk of disruption drops, so does the risk premium built into oil prices. Traders are less anxious, and prices fall. When stability returns, oil flows smoothly, and the extra costs that come from uncertainty disappear, making fuel more affordable for everyone. That's why diplomatic breakthroughs in the Middle East can quickly lead to lower costs at the pump. The connection is direct and powerful. When leaders choose peace, it's not just good news for the region, but for drivers and families everywhere. What happens there truly shapes what you pay here. So next time you see headlines about the Middle East, remember, they're not just distant stories. They're part of the reason your gas prices rise or fall every time you fill up. Optimism in the oil market is fueled by diplomatic progress between the US and Iran. For years, the relationship between these two nations has been marked by deep mistrust and recurring crises, often sending shockwaves through global energy markets. Now the world is watching as a rare window for dialogue opens, offering hope for a breakthrough that could stabilize not just oil prices, but also broader geopolitical tensions. After years of tension, both sides are now discussing a detailed peace proposal. The negotiations are complex, involving not only nuclear issues but also regional security, economic cooperation, and the future of sanctions. Each round of talks is closely scrutinized by international observers, as even small steps forward can have outsized impacts on global markets. The US has paused certain actions against Iran, signaling a willingness to negotiate. This pause is seen as a gesture of good faith, intended to build trust and encourage Iran to reciprocate with its own concessions. The proposed deal includes limits on Iran's nuclear and military activities in exchange for relief from economic sanctions. These restrictions are designed to prevent escalation and ensure transparency, while the promise of economic relief offers Iran a path toward recovery and reintegration into the global economy. Lifting sanctions would be a major incentive for Iran to cooperate. It could unlock billions in frozen assets, boost trade, and improve living standards for ordinary Iranians, who have long felt the impact of economic isolation. These talks are crucial. A US-Iran conflict could disrupt oil supplies and spike prices worldwide. The stakes are high, as any breakdown in negotiations could quickly reverse the current sense of stability and send markets into turmoil. The mere possibility of peace is already calming markets. Investors and traders are responding to the positive signals, with volatility easing and confidence slowly returning to the energy sector. If negotiations succeed, one of the biggest risks to global oil supply could disappear. This would not only benefit producers and consumers, but also contribute to greater energy security for countries around the world. While talks are delicate and success isn't guaranteed, the fact that both sides are engaged is a significant step. The process is fragile, with setbacks possible at any moment, but the commitment to dialogue is a positive sign. For now, the fear of immediate crisis is fading, and oil prices are reflecting that shift. Markets are cautiously optimistic, waiting to see if this diplomatic momentum can be sustained. The world is watching, hoping diplomacy will bring both peace and economic relief. Leaders, businesses, and ordinary citizens alike are invested in the outcome, knowing it could shape the future of international relations. The outcome could reshape the global energy landscape, influencing everything from fuel prices to international alliances and economic growth. Every move at the table matters, as the decisions made here could echo for years to come, affecting millions of lives and the stability of the world economy. Let's look at the numbers behind this week's oil price drop. Both Brent Crude and West Texas Intermediate global oil benchmarks fell sharply. As of Friday, Brent dropped to $107.50 per barrel and WTI to $93.80. That's a weekly loss of over 4% for both, reversing the previous upward trend. Just weeks ago, analysts feared prices could soar above $120 if conflict escalated. Now optimism about peace is outweighing those fears. These price shifts show how quickly market sentiment can change. The market is now betting on stability, not crisis. Diplomatic efforts are having a real measurable impact on the global economy. Oil prices are the clearest indicator of that hope. Another key reason oil prices are falling, the steady rise in U.S. oil stockpiles, which is making waves across the global energy market. According to the latest government data, American crude inventories have surged, jumping by nearly 7 million barrels just last week alone, far exceeding what analysts had expected. This brings U.S. stockpiles to their highest level since June 2024, a clear signal that the market is currently very well supplied and not facing any immediate shortages. When supply outpaces demand, prices naturally drop. With so much oil on hand, sellers are forced to compete, often lowering prices to move their product. These growing stockpiles add to the downward pressure already coming from diplomatic progress in the Middle East, where peace talks are easing fears of supply disruptions. With such a large buffer, the U.S. is now better prepared to weather any minor disruptions elsewhere in the world, whether from storms, technical issues, or geopolitical tensions. This abundance reassures traders and investors, keeping panic at bay and helping to stabilize the market, even as headlines shift day to day. The combination of diplomatic progress and rising inventories is proving to be a powerful force, pushing back against the threat of high prices and sudden spikes. Oil prices are shaped by a complex mix of global politics, supply, and demand. Right now, all three are working together to keep prices in check. For everyday consumers, this means some much-needed relief at the pump, with lower prices making it a little easier to fill up your tank. The market is less anxious, volatility is down, and your wallet benefits from the stability, at least for now. It's a rare moment of good news in the energy world, offering hope that stable prices could last, if these trends continue. The Strait of Hormuz is the world's most critical oil choke point. This narrow waterway connects the Persian Gulf to the open ocean, carrying a huge share of global oil exports. If it were blocked, oil prices would skyrocket instantly. Iran's strategic position along the strait has made it a flashpoint in U.S.-Iran tensions. In the past, threats to close the strait have rattled markets worldwide. The U.S. and allies are committed to keeping it open, even by force if needed. That's why current peace talks are so important, they reduce the risk of a major supply disruption. A diplomatic breakthrough would ease the market's biggest fear. The security of this single passage is directly tied to global economic stability. As long as oil flows freely through Hormuz, prices are less likely to spike. The oil market reacts quickly to any sign of trouble or relief. For months, fear of Middle East conflict drove prices up. Now peace talks between the US and Iran are calming those fears. When the risk of war drops, traders stop hoarding oil and prices fall. The market is unwinding the fear premium that was built into every barrel. Positive diplomatic news shifts focus back to supply and demand, not panic. Analysts agree, credible steps toward peace can trigger rapid price drops. The market isn't certain of peace yet, but even a hint of progress brings relief. Global politics and economics are deeply connected, and you see it at the pump. Every barrel of oil includes an invisible risk premium, extra cost added due to fears of disruption. When tensions rise, so does this premium, making oil more expensive for everyone. It's like insurance against future crises, built into the price. This week, news of US-Iran talks has shrunk that risk premium. As the threat of conflict fades, buyers are less willing to pay extra. The result, lower prices for oil worldwide. The risk premium is always changing, driven by headlines and world events. Understanding it explains why oil prices can swing so wildly. This week's drop isn't just about supply, it's about shrinking fear. Less risk means less cost for everyone. The future of oil prices hinges on the outcome of US-Iran peace talks. If negotiations succeed, sanctions could lift, Iran could export more oil, and prices may fall further. The risk premium would shrink, creating a stable, lower-cost environment for consumers. But if talks collapse, fear and uncertainty will return, sending prices soaring again. The market is cautiously optimistic, but every development is under scrutiny. The next few weeks are critical for the global economy. Oil prices, and your energy costs, hang in the balance. Diplomacy will determine whether relief at the pump continues or high prices return. The world is watching, and the stakes couldn't be higher. The path ahead depends on peace, or the lack of it.